back, everybody, to another episode of the Passive Income Lifestyle Series. I'm your host, Travis Watts, the Director of Investor Education here at Ashcroft Capital. Have a really exciting episode for you here today. What we're talking about are real estate private placements or syndications and the BRRRR method. Disclaimers as always, never financial advice. I'm not a financial planner or advisor or a CPA or an attorney. So please always seek licensed advice when it comes to your own investing. With that top of mind, if you're not familiar with the acronym BRRRR, what it stands for is buy, rehab, rent, refinance, repeat. That's a lot of R's. And a lot of people think of the BRRRR method, or I should say talk about the BRRRR method, in terms of single family homes. Not a lot of people are talking about the BRRRR method when it comes to multifamily value add private placements, which is what we do here at Ashcroft Capital. So that's why I created this episode. Let's dive in. So here's an example of how the BRRRR method works with a single family home, since that's what most people are familiar with and talk about. It would be the example of buying a fixer-upper property for, say, $200,000, putting a 20% down payment on the home, which would be $40,000. And then let's say you put $30,000 into improving the property. So at this point, your total investment is $70,000. That's your down payment and your renovation budget. Now what you do is you rent out the property to a tenant and cash out refinance. So in order to make that work successfully, this home now needs to be valued around $290,000. So here's how those numbers break down. If the property is now valued at $290,000 based on comparable sales, and you wanted to keep 20% down on the property, then that's going to be $58,000. And when you do a refinance, you have to pay off the previous loan, which was $160,000. So when you minus out those numbers from $290,000, you're left with $72,000 in equity, which comes back to you so that you can take that money and go do another investment. So as you can imagine, this is a pretty difficult strategy to pull off, generally speaking, because number one, you need to find a property that's well below the market comps. Number two, you need to know what strategic improvements to do to the property, and you need to stay on budget. And number three, you need to get an appraisal that comes back and supports the market comps at a much higher valuation. And the reason this has been so hard to do over the last few years, which is what led to the BRRRR method falling out of popularity, because in 2021, we had all-time high pricing, all-time low inventory, and lots of competition in the market. In 2022, the Federal Reserve began aggressively increasing interest rates, which hurts valuations of properties. So as you might imagine, if you buy a home with a 3% mortgage, fix it up, and then you have to go get a 5 or a 6% mortgage, you may not have enough equity in the deal to pull off the strategy. So that brings us to 2023. And what we're seeing now are that prices came down in a lot of markets nationwide, and interest rates are nearing the top of the rate hike cycle. So this is why the BRRRR method is regaining popularity, because now you can finally buy real estate at a slightly reduced price with the expectation that interest rates will either stay the same or they may even go lower in the years to come. It's much easier to do this particular strategy when interest rates are flat or in decline. And if we look at the forward curve on the federal funds rate, you'll see that there's three likely possibilities from here. First of all, the FOMC, which is the Federal Open Market Committee, this is essentially just people on the chair and in the board of the Federal Reserve, anticipate a flattening of interest rates through the end of the year. If you look at the Fed futures on what expectations are of federal funds rates, they're in a slight decline through the end of the year. And the third scenario is if something breaks in the economy. unemployment shoots up, more banking failures happen, a nasty recession comes into the economy, this is where it's likely that the Federal Reserve is going to aggressively decrease interest rates. So, overall, it's a pretty good outlook in terms of the expectations of the federal funds rate at this time, making the BRRRR strategy a little more enticing in 2023 and moving forward. So, with all this in mind, how does this all pertain to real estate private placements and syndications? As many of you know, I primarily invest in value add real estate private placements or syndications. And it's a very similar method that I described using the single family home example. We're just doing it on a much larger scale with very large apartment communities. We buy a property at a discount, we force appreciation through strategic improvements, we rent it out to tenants in the meantime, and then we have the option to refinance or sell the property, ideally for more than what we paid for it. And I want to make this episode for you because I'm seeing in this sector more and more deals pop up where the operators or general partners are predicting or anticipating to do a refinance in 1, 2, or 3 years. And that's something that we haven't seen in quite some time. So potentially some great opportunities coming up. As I mentioned previously, the last 2 years have been really difficult for single family and for commercial real estate because of the all-time high pricing and high demand of 2021, and then the aggressive rate hike cycle through 2022, which hurts valuations. So if you're considering investing in value add real estate private placements this year in 2023, or if you have more questions, want to learn more, take a deeper dive, find out how the BRRRR method could potentially benefit you, feel free to reach out. This is what I do both personally and professionally year after year, and I'm always happy to be a resource for you. You can reach me at travis@ashcroftcapital.com. And to learn more about Ashcroft Capital's current offerings and opportunities, you can visit avaf3.com. Have a great week, everyone. We'll see you in the next episode.